In our first lecture, we sort of looked at the accounting equation and noticed how things impacted the overall equation as we looked at transactions. Now here's the problem with that. Do you think Walmart can run around and have this huge accounting equation with all of their accounts and assets listed and plug numbers in this way? It probably wouldn't be feasible. Now for our little company here that we did in our first lecture, absolutely. It's easy to do because there's not a whole lot going on. But we need a better way to record. So typically what we do is transactions are recorded in different manners, but we typically record them in a journal of some sort. Journals allow us chronological listings of the events of the company. Now in this class, to keep it very simple, we're going to just record everything in the general journal so that we can see the impact. Keeping in mind that there are other journals that companies use, such as sales journals, purchase journals, and not necessarily just straight general journals. Again, a journal is the chronological listing. But before we can record in a journal, we must understand what we call the rules of debits and credits. We do not run around in accounting and put plus minus all the time. We have general terms called debits and credits, and what happens to an account when we debit it depends on the type of the account. The word debit means left, and the word credit means right. We believe that both of those are derived from Latin terms, and there's sort of competing views on what Latin terms it comes from. So we won't get into that, but debit means left, credit means right. So what does that mean? Well, everything on the left side of the equation. So if you look at this sort of equal sign, things on the left are increased with a debit. And the common abbreviation for debit is DR. Seems a little strange since there's not an R in there, but again, that goes back to the Latin root. So we debit those accounts. So to increase an asset, we debit the account. Now if we flip sides of the transaction or the equation, we're on the right side now. So things on the right side are increased with credits. So credits are CR. So liability accounts are increased with the credit. Now equity we have to talk about. Equity itself is increased with the credit. But remember, there are certain items under our equity that decrease our overall equity. So let's go through each one. Common stock. Common stock increases our equity. So therefore, common stock is typically a credit account. Revenues also increase equity, so they're going to be credits. Now, expenses and dividends. So again, equity as a whole, since it's on the right side, is increased with a credit. But remember, we talked in the last lecture that expenses and dividends, as they go up, they actually reduce our overall equity. So when we get to expenses and dividends, we actually increase those with debits because they go against equity. Okay? Now, whatever increases it, the opposite will decrease. So we can't think of a debit as a positive, a credit as a negative. That's not the way it works. For an asset, a debit is a positive, it increases. A credit is a negative. So under an asset such as cash, a credit to the account will decrease the account. A debit will increase it. Liabilities are just the opposite. Liabilities, a credit will increase. So in this case, credits are positive. But a debit will decrease a liability account. So to bring your debt position down, you debit the account. Now you're like, well, wait a minute, this makes no sense. And it's true. It's very tough or difficult for students to remember and understand the rules of debits and credits. But it allows us a means to record entries without all these pluses and negatives. So how can you remember it? Well, I will say the rules of debits and credits are such. They are rules. Just like laws, you commit laws to memory. Speed limit sign. The minute you see the speed limit, you know immediately that's the speed in which you should not go over. Well, rules of debits and credits you have to treat the same way. When you see an account, you should immediately be able to say it is increased with a debit or credit and decreased with a debit or credit. It's one of those things that should become second nature to us. We have to sort of commit them to memory. I hate to say memorize, but it is true. So what's a couple of ways we can remember it? Well, I like acronyms, so if you pronounce it clear day, CLRDAE, that sort of gives you the rules of debits and credits. C in clear, CLR, starts with a C, so therefore it is a credit account. So that would be common stock is our first. liabilities would be our second, and revenues are our third. So CLR, common stock liability, and revenue accounts are always increased with credits. Day accounts, DAE, I know it's misspelled. Okay, we're not going for proper English here. We're going for acronyms so that it can help us. Day accounts are increased with debits. So dividends, all of our assets, and our expenses. So when you look at an account, if you can classify it or figure out how to classify it in one of these 6 buckets, then you know the rules of debits and credits. Now, some textbooks treat it a little bit different. They do dealer, D-E-A-L-O-R. So what does dealer stand for? Well, the D in dealer, again, these are debit accounts, so DEA are debit accounts. So it would be our dividends are increased with the debit, our expenses are increased with the debit, and our assets. Then on the L side, we've got our credits here. Again, if you like the dealer, remember the LOR are your credit accounts, so that's going to be your liabilities, your owner's equity. Now what that means would be like your common stock in your accounting equation, your paid-in capital, things of that nature from your owner's side. And then your revenues. All 3 of those. Now, I personally, if you can remember acronyms, I, again, personally go for clear day because the C is credit, the D is debit, and then we've got the common stock specific. Owner's equity and dealer does cover if you have preferred stock in the future, but by the time we get to that stage, I would expect that you have it memorized and you understand the rules of debits and credits. So this really is either way you can remember it, or if you have your own method, it's fine. But a lot of times acronyms will help us remember the rules of debits and credits. So keep that in mind. You can either use clear day, CLR, DAE, or you can do dealer, DEALOR, as a means to sort of learn and memorize the rules of debits and credits.